All right, welcome everybody. Good afternoon. We're so excited to have you all here with us today. I'm going to go ahead and introduce this afternoon's session. One moment, please. All right, can you all see my screen? If you could give me a thumbs up. Wonderful. Welcome everybody to our financial aid webinar series brought to you by the Northern California College Promise Coalition. This is the fourth out of our series of financial aid webinars, and we're very grateful for our partners, many of which I'll talk a little bit more about later. But we're especially glad to have you here with us joining our special speaker, Nadja Jepsen, who we'll introduce in a moment. Founded in November 2019, the Northern California College Promise Coalition is a network with a collective impact approach, bringing together leaders, practitioners, and resources, such as these free virtual webinar series, to share leadership over college access and success efforts in the region to transform communities. We believe that together we can change the trajectory for tens of thousands of Northern California students. And my name is Meredith Curry. You can call me Mare, pronouns are she, her. I'm in East San Jose, California, and I'm the executive director. Collectively, our 32 and growing members serve over 58,000 high school and college students across the 9 Bay Area counties, Sacramento, San Joaquin, and Tulare. We appreciate the leadership and thought partnership of our steering committee, champion and advocate members like Nadja, and our advisory council. You can learn more about our membership on our website. Please be sure to check out the other sessions that we have in store for you and register. Next week is the last week after today. Please help us promote the financial aid webinar series to your colleagues and fellow college access and success professionals in your network. We're also extremely grateful for the partnership of the University of California, Cal State, California Community Colleges, Immigrants Rising, MoneyThink, Nadja Jepsen, and College Track. Please stay tuned for an announcement about a presentation from the California Independents. So it's now my pleasure to introduce this session, Navigating Scholarship Displacement with Your Students. And our speaker today is Nadja Jepsen, Financial Programs and Scholarship Senior Director at College Track. Nadja has worked in the college access and persistence fields for 8 years, with 7 of those focused on scholarships and college affordability. She currently runs the scholarship program at College Track, a national education nonprofit organization that supports first-generation and low-income students to and through college. She is also an active member and regular presenter for the National Scholarship Providers Association, and recently joined the Northern California College Promise Coalition as an advocate member, supporting AB 288, the California ban on scholarship displacement. Nadja grew up in the Bay Area and was a scholarship recipient herself, making her passionate about educating students, families, and educators about scholarship displacement and supporting them with practices to mitigate it. Please note that before you leave today, there's going to be an exit ticket, and we'd love for you to be able to complete that exit ticket and let Nadja know how she did and how our series is doing. And so without further ado, thank you to our speaker for joining us. You now have the floor.
Hi, everyone. Let me just share my screen. And then can I get a thumbs up if everyone can see my screen? Okay, great. So we're going to be talking about scholarship displacement today, about what it is and why it happens. My name is Nadja Jepsen, and I'm the Senior Financial Programs and Scholarship Director at College Track. Like Mare said, I've been working in the college access field for 8 years, and 7 of those years have specifically been in scholarship administration and college affordability. I'm a frequent presenter on scholarship displacement. I'm very excited about being a new advocate member of the Northern California College Promise Coalition, very passionate about California's push to try and have a bill outlining scholarship displacement. And I was also a scholarship recipient who was impacted by scholarship displacement policy. So I want to start with what scholarship displacement is. I'm going to be using the National Scholarship Providers Association's definition. So this is also known as award displacement, and it's when one form of financial aid, like a university grant, is reduced or canceled because the student won a second form of financial aid, like an outside scholarship. I wanted to use these definitions as well because I'll be talking about them in the presentation, but there are two main types of scholarships. There are merit scholarships and there are need-based scholarships. Merit scholarships tend to be something that's based on an achievement or an interest. You can see students winning this for having a high GPA, maybe a major. We see a lot of STEM-related scholarships or an arts student getting a scholarship. It also can be participation in an extracurricular activity like field hockey. Sometimes these scholarships have to do with demographics that pertain to gender, race, and affiliations with certain countries. And these scholarships tend to not be impacted by a student's financial situation. Then we also have need-based scholarships. And these are solely based on the student's financial need. This is something that's determined by the FAFSA or California Dream Act and the student's expected family contribution. This is something that's determined by the US Department of Education. These type of scholarships usually require the student to provide documentation such as the FAFSA, a student aid report, tax documents, something that shows what their financial need is. Some of these scholarships require students must be a Pell recipient. And there can also be additional requirements like asking a student to say if they're winning other outside scholarships that might not be captured on a financial aid award letter. So I'm going to talk about my own personal experience with scholarship displacement, both as a student and as a provider. I think some people on the call may relate to this experience, but college affordability has always been really important to me. I wanted to go to grad school, but I knew that I wanted to pick the most affordable option. So I was originally thinking about going to a California state university because at the time that was the cheapest option I could find in the US. But after talking to some people and crunching some numbers, I was shocked to find out that it was cheaper for me to be an international student in England than for me to go to a local state school in California. And which says a lot about just how expensive higher education is. But I still wanted to apply for scholarships. So the University of Brighton had 2 scholarships that I was eligible for. And I didn't think I was going to win them because in the US, graduate scholarships are few, far between, and very competitive. But I was really happily surprised when I did immediately hear back from the more generous of the 2 scholarships. And because I had already heard that I had won the most generous one, I started getting really excited. And I thought, okay, well, if I have that scholarship, I'm probably going to win the other one. And then I can put them together and it's going to cover my tuition and fees and housing. And as I'm getting really excited, I actually read the whole email. And in the bottom of the email, it says that a stipulation of me receiving the scholarship is that I cannot have any other scholarship. I can't have another university scholarship. I can't have another outside scholarship. And that if I do win one, I would be forfeiting the more generous of the 2. And I was disappointed to read that, but this was months and months before I was going to be starting the program, before I would be moving to England. And I got another written communication about this, again, congratulating me and again, reminding me of the outside scholarship policy. And I even got a phone call from the scholarship coordinator, again, reminding me of the outside scholarship policy. What I didn't realize is that what I was experiencing in England was quite unique compared to how American students experience scholarship displacement. And that happened about 2 years later when I had my first postgrad job as a scholarship coordinator in the US. We had just finished our big annual scholarship, which involves a lot of time on both the staff end and the student end of applying, sending in all your documents, figuring out exactly what the students need, and then sending the scholarship money in. And I started getting phone calls and emails from students a couple weeks into the semester saying that they had lost their scholarship at their university, specifically because of the scholarship we had given them. I didn't make the connection at the time that what had happened to me was what was happening to them. I actually thought it was a misunderstanding. I thought, this is just a misunderstanding. We can call the school, they're going to reinstate your grant. I tried looking online to find information about this. And then I realized that it actually wasn't a misunderstanding, but these students had not been informed about the outside scholarship policies at their universities. And a big difference between me finding out months before my program started and I had enough time to determine, was this school a good financial fit for me? The students in the US were finding out weeks into the semester after they were already enrolled at that university. And I'm assuming that some of the people on the call have had this exact experience and are probably, that's why you're here today. So why does this happen? There are different reasons. One of them is that there are limited resources at colleges, and colleges want to give as much money to as many students as possible. And so they might see a student winning an outside scholarship and think, oh, that's the student then doesn't need this money from us and we can give it to someone else. In my experience, in the last 7 years, we see this to happen most commonly at schools that have small endowments. There also can be contrasting policies between colleges and scholarship providers. I think something that students might not realize is that not every scholarship is created with the scholarship understanding the policies of the college the student will go to. So for example, you might see community scholarships where a student is awarded a scholarship before they even know what college they're going to go to. And so there's not always great communication between scholarship providers and colleges to ensure that however the scholarships are being awarded aligns with the policies of the universities. And there is not one set policy that every college adheres to. And so it's hard to create a scholarship that'll just work at every single college. Another thing that can cause scholarship displacement that not everyone may know is that there are taxable scholarships. Even though the students have a full cost of attendance that they are expected to pay to be able to be a student, the IRS has drawn a line in the sand, and tuition and fees, books and supplies, and required materials are the only non-taxable items of the cost of attendance. So this means things like housing and travel and personal expenses are all actually considered taxable by the IRS. There is a link provided in this presentation if you want to go look at it. It's one of the least jargony IRS website links that I've seen so far. But the way that this can cause scholarship displacement is that you can see students getting scholarships that are earmarked only for tuition and fees. So if you have a student whose cost of attendance is $50,000, but their tuition and fees is only $25,000, the college cannot accept more than $25,000 if it's earmarked for only tuition and fees. So if a student is receiving multiple scholarships and they're only for tuition and fees, once that $25,000 threshold is hit, the college can't accept any more money for that item and would have to return any funds that came over that amount, which can cause scholarship displacement. The next one is Title IV and over-awarding. I do want to start by saying that Title IV is very complicated and convoluted, and a financial aid office professional said it can take a year to learn all the rules, and then it can take another year to learn all the loopholes. So this is just an overview. But Title IV refers to federal student aid that was established by the Higher Education Act of 1965. And students can only receive Title IV funding to the extent that they show financial need. This is really important for people that are supporting students, for students and families to understand that financial need for federal student aid is the cost of attendance minus the expected family contribution. It's not the entire cost of attendance. This is an important distinction to make when students are determining if they're getting need-based aid or merit aid from the university, because need-based aid cannot exceed that financial need. So that means if you have a student with a 0 EFC, then they can actually get need-based funding for their full cost of attendance. But many of the students that you work with probably don't have a 0 EFC. And so you have to remember that that financial funding cannot cover the EFC. So examples of Title IV include, but are not limited to, the Pell Award, federal direct loans, FSEOG, the Perkins loan, and work study. Colleges that have Title IV funding cannot over-award a student when they're packaging them. I now want to talk about some similar policies to look out for that don't technically fall under scholarship displacement, but I would argue that they are very, very similar. There is another thing that you want students to look closely at and kind of investigate about front-loading or freshman year only scholarships. This is when a student will receive more generous offer for their freshman year than they will in their subsequent years. We see this as kind of a recruitment tactic by colleges, and it's not usually clearly stated on the financial aid award letter that that scholarship would only be available their freshman year. The College Investor podcast even reported on this, saying that a lot of colleges are actually in denial of doing this process. And so it can be hard to figure out which scholarships specifically are freshman year only. There are also the conversation around flat rate or consistent awards. These are scholarships that do not increase with cost of attendance increases. And then that means that they're going to cover a smaller percent of the student's cost of attendance in subsequent years. These are really common. An example of this would be a student that receives $2,000 for every year that they're enrolled in college, which is great. Scholarship money is great. But if their cost of attendance increases with each year, the $2,000 is going to cover a smaller and smaller percent of their cost of attendance. And it's good for families to factor that in when they're doing financial planning for colleges. We also see other financial aid package changes. And so today we're specifically talking about when students are losing gift aid from the university, aid that they don't need to pay back. But you can also see situations where a college would displace or cancel the loans or work study. Of financial aid package changes, that is our preference. We would much rather a loan be displaced so that the student can get an outside scholarship. But I do want to flag, because we have had students bring this up with us, is that sometimes you want to be careful around work study. We had a student that had a very coveted work study position that was only available to her if she had work study, where she would be able to work in a lab. And she actually made the decision to forego an outside scholarship because she wanted to keep that work study. So it's just another thing to consider. We also see something, and this tends to be at private schools, is called minimum student contribution. It can also sometimes be called student responsibility or parent responsibility. And that is when there is a financial requirement that all students, regardless of income, are required to pay out of pocket. We have seen this anywhere from $1,500 to a couple thousand. And we tend to see this at private schools. So I'm going to do an example of what it can look like if a student is experiencing scholarship displacement, especially if the college does not provide their outside scholarship information ahead of time. So we have a student, Mary, and she was accepted to 3 colleges, College A, College B, and College C. Mary's first choice after looking at the 3 schools is College B. It was the one that she just liked the best and she was most interested in before she got her financial aid award letters. Mary has an outside scholarship that she can take to any college. And when she received her financial aid award letters, she was really disappointed to see that College A was actually the one that gave her the best package. She saw that at College B, she was going to owe, after loans, almost $20,000 each year. And so after talking with her family, she decides to go to College A instead of College B. based on the information she has been given by an outside scholarship provider and the school about how much money she will get to go to the school. This is what happens when a student does not know about scholarship displacement policies, is that Mary's school, College A, the one she decides to enroll at, sorry about that, is going to displace her aid dollar for what she got in her outside scholarship. She was not notified about this though, and she doesn't find out until she's a couple weeks into her fall semester. When this happens, it shows that she's actually going to have the same financial gap that she would have had at College B, which is the school that she wanted to go to. This seems extreme, but situations like this do come up with our students where they are not aware of an outside scholarship policy, and that they find out after they have already told the school that they wanted to go to that they will not be enrolling, and they've already enrolled at the school that they didn't know about the outside scholarship policy. Now we're going to transition into how can we find out about this information and what can we do about it? I've worked with hundreds of colleges in the last 7 years, and one of the things that I have to do for my job is to actually look for this information on the websites. And so here are some keyword searches that I start with. So the first 3 is what you can do if the college does provide their outside scholarship policy on the website. If you try the first 3 search options, if they do have it posted, then those will garner that result. Unfortunately, not all colleges do provide this information on the website. So the next thing that you want to do is you kind of want to go straight to the horse's mouth and ask either the financial aid office or the scholarship office. Every college is set up a little bit differently. And so outside scholarships might have their own team that deals with them. And that's great, but not all schools do. And so I'd try to see if there's a scholarship coordinator first. If that doesn't exist, then the financial aid office is the next place that I'd want to go to ask about their outside scholarship policy. Even if the outside scholarships don't live in financial aid and instead live under the bursars or student business services, the financial aid office can at least point you in the direction of the correct department. And if it's one of those college websites where they're making it really, really hard for you to find contact information, I just start looking at the staff directory for someone that works in financial aid. I've noticed it's been a little bit easier in recent years, but yeah, some colleges can make it really difficult to find that information. And I want to give you an example of a school that does this very well. The last time I did this presentation, one of the participants had asked if we could look at Duke University. This is something that I would say is gold standard for outside scholarship information. And I wasn't able to get the whole page on there, but I recommend people looking at it. So it has a definition of outside scholarships. It has a really easy link for students to report their outside scholarships. And then it also, and this is the part where it cuts off a bit, it breaks down how an outside scholarship would impact their aid. Every college should do this. This is, I feel like, a small lift on the college end. It's really, really helpful for the students to see this information. And it's just actually giving them the full information before they make a really huge financial decision. All right, so I just went through a lot of things that can go wrong with scholarships. So I definitely want to talk about misconceptions. So a common misconception, a student is just going to lose their scholarship, so they shouldn't bother applying. I do not agree with this at all. While there are situations like I've listed where students can potentially lose some of their scholarships, it's definitely not the case where they're going to lose all of them. Higher education is extremely expensive in the US, and I think that scholarships can really help people just close that gap a little bit more. Again, there's a difference between merit scholarships and financial need scholarships, and so they have different parameters and how they would be displaced as well. Another thing that I've heard from students, scholarship providers, and people just curious about this is, how about the student just doesn't tell the college about the scholarship? And I would really, really not recommend doing this. The majority of scholarship providers pay the money directly to the university. So the university is going to find out anyway. And if they are going to adjust the student's package, is it really more beneficial for the student to have this happen a couple weeks later in the semester? Even if the money isn't being paid to the university, there are still ways the university can find out. Outside scholarship providers are required to provide that information if they're asked. And so it really can be tricky if the student tries to hide that information. And then another misconception that we talked about earlier is that scholarships are not taxable. Scholarships should not be taxable, but unfortunately, like I talked about earlier, some of them are. And I'm now going to talk about things that students can do to try to mitigate scholarship displacement. And first, what they can do is they can go to their outside scholarship providers directly. So if you have a student that has won an outside scholarship, this could be a Rotary scholarship, a scholarship that they won through their high school, a community scholarship, something like the Coca-Cola scholarship, a Dell scholarship, and something that they can ask. And everything listed here is something that one of our students has successfully done with an outside scholarship. So we had a student that won a full ride to Stanford, and because of that, they didn't need a very generous scholarship that they had won. And so they asked if they could defer their scholarship for graduate school, and they were told yes. And so now the student can use that money for graduate school and is able to decide if graduate school makes sense in their career trajectory instead of can they afford it. Another great tip that I learned from some students is asking if the scholarship can be paid towards their student loans. Like I talked about earlier, some scholarships will only be for tuition and fees. A question that the student can ask is if the scholarship can cover the full cost of attendance. And if for some reason the outside scholarship provider only wants to cover non-taxable items, then the student can go back to them and ask for them to then increase it to all of the non-taxable items instead of just tuition and fees. A great tip that I actually got from one of the presentations that they had last week with University of California is students a lot of times are not getting financial aid outside of the traditional academic year. And so they might need to take summer school. A great thing that a scholarship provider could do is they could let the student use the scholarship for a summer session when they would be less likely to have financial aid. And then another thing that a student can do is ask if the scholarship could be paid to them directly or into a 529 account. But I want to flag that paying a student directly is also not me advocating that they should hide the scholarship from their college. The question that students can ask the financial aid office. Going back to the financial need, it is the cost of attendance, then you take away the expected family contribution, and that's the financial need. If a student has an opportunity to actually increase their cost of attendance, then that can open them up for more aid. We have had students successfully do this. They just need to bring proof of an increased need. Proof could be a lease that's showing that their housing is more expensive than the published expectation of housing. A course syllabus with supplies listed. This can be helpful if the student is, for example, a chem major and their supplies are much more expensive than the published list of books and supplies. Or a laptop cost if that's not accurately captured in the cost of attendance. And then the financial aid office can officially increase their cost of attendance, and then they can accept more aid up to that dollar amount. Here are some action steps for counselors. I would say inform students about scholarship displacement and financial need by their junior year so that they can start financially planning with their families. You could do an activity where you gather outside scholarship policies from popular colleges. So a couple slides ago, I showed everyone the Duke University outside scholarship page. This is something that you could maybe do with your students where they could look up the outside scholarship policies of colleges they're interested in going to. It would be a good way for you to see like which schools don't provide this information at all, which schools provide partial information, and which schools like Duke are providing really comprehensive information. talking with students about potentially coming up with a plan B if they know they're going to be getting a lot of financial-based scholarships. Students can also create a spreadsheet of all of their scholarships, and a data point that they should check is if it's a merit scholarship or a need-based. One thing I wanted to flag that UC had said earlier is that the majority of the university grants from the University of California, according to them, are need-based. I would say schedule family affordability nights in 10th and 11th grade covering this information. If you can create or find a one-pager about scholarship displacement, it's maybe helpful to send home to families so that they can read over it. And then invite scholarships or financial aid professionals to come and talk with your organization or school so that they can give this information either in person or virtually. There are some bright spots in all of this. There is some legislation that Maryland and New Jersey both have actually passed laws banning scholarship displacement. We have Michelle Johnson on the call, who did a lot of amazing work in Maryland in 2017, has continued to advocate for this work. Currently, Pennsylvania, Washington State, California, and Illinois have bills, and so hopefully we can join Maryland and New Jersey in banning this. And then my next two slides are just email templates that that students can use if they want to reach out to their financial aid office and ask about the outside scholarship policy. But now I'm going to take a break from talking and go over and see if there's any questions in the chat.
Nadja, first of all, thank you so much for preparing so many useful, actionable tips for everybody. Please use your Zoom reactions to show Nadja the appreciation for what's been presented to us so far. We do have some questions in the queue, so just give me one moment, Nadja. So the first one, do colleges have an annual budgeted amount for scholarships? And while you think about that, just want to acknowledge all of the appreciation you're getting with your reactions.
So colleges, they do have. Do you mean like, do they have a budget for how much financial aid they give out every year? If that is the question, then yes, they do. But that depends on each individual college. But yeah, they have a certain amount of money that they can use.
May I ask, follow up with the question? Thank you. The reason why I ask is because I moderate a group with over 7,000 families. And we constantly tell parents in that group that if your kid has gotten into a college that you know they're not going to go to notify the college and release whatever merit you may have received so that someone else can receive it. And the argument back is always, why would we do that? Because, they think that the colleges have all this money and it doesn't matter if they don't notify them that they're not coming until, if they wait until May 1st. They think that they should, wait until May 1st, as opposed to if they know for sure they're not going to go ahead and notify the college.
Yeah, I guess probably the part that I can't speak to is I don't know how quickly the colleges can move the money around if they do let them know ahead of time. But I would definitely be giving the same message that you're giving families that, if they do know that they're not going to be attending, they should let the school know, and that money should be going to a different student. I think in practice, it probably doesn't happen dollar for dollar that way, but I could see that it does also happen in some situations.
Thank you.
And thanks for clarifying that question further, Lisa. The next question, can the scholarship committees pay after the add drop period so that it meets indirect costs?
So this is a great question. Yes, you can definitely do that. The only thing that I would caution around that is that if that scholarship is still going to push the student above that financial need, it would just be delaying their scholarship displacement. So if you know that the amount of money that you're sending is not going to be pushing out of that financial need threshold, then yeah, I think that that's a great idea. Because for anyone who's listening who's not sure, once the tuition and fees and direct costs have been met at the university, if the students are receiving more money and they have not exceeded their financial need, they can actually get refund checks from the college to pay for things like housing or personal expenses. College Track, we have a scholarship that's very similar to a last dollar scholarship, where we consider the students' full cost of attendance. And yes, in certain situations, our students are getting those refund checks to pay for those indirect costs.
Okay, well, thank you so much for that question and for that clarification, Nadja. The next question, do you have any tips for helping students determine whether scholarships are taxable, especially if the scholarship funds went toward both taxable and non-taxable expenses?
Yeah, so this is just going to throw it out there. I'm not a tax expert, so everything that I'm just talking about my own personal experience. But one thing that we do say for our students is that I'm not sure what the yearly limit is for what you need to report on your taxes. I believe it's close to 12,600, if someone could correct me. But if their taxable items exceed that amount, that is when it would be considered something that you would have to report as income. But the student would have to kind of know exactly how much of their scholarship was going to the taxable versus non-taxable items.
Thanks, Nadja. And if anybody needs to ask a follow-up question, especially if that was your question, please feel free to let us know. Thanks for that response. There's one more question. Can you dig in a bit more around the pros and cons or tips on giving scholarships directly to students?
Yeah. So I'll start with the pro. A pro is that if you're giving the money directly to the student, then they're able to really determine how to best use that money, and they have a bit more flexibility. If you're paying the school directly, or you're paying, the housing agency directly, or you're paying Southwest directly, that's just like one more hurdle where the student has to convey information to you, and then you have to get the payment out. So it can be a little bit faster if you give the money directly to the student. I guess one of the cons could be is depending on how much evidence you may need about where the money is going, that might be another level of requiring students to submit receipts to you. If you're a program that has a lot of students, that could be a huge capacity lift to just gather all the receipts, upload them, make sure someone's checking through them. What College Track does for our scholarships that we pay directly to students, we do have them sign something saying that they will only use it on permissible education expenses. So our students will sign that. And then our need-based scholarship, which is our kind of large traditional scholarship that they apply to once a year, we send that to the university. And I guess tips for it, we've always done either like a check or a direct deposit. But I know there's so many different ways that you could pay students directly. I've heard of, I believe it's called PEX card, PEX, where organizations can kind of set up almost like a debit card for students, and it has approved vendors that the students can use it at. But I can't, because I've never personally used that, I can't speak too much to it, but there's many, many different ways that people can pay students directly. And then I've also heard of, I'm blanking now, I think it's the Dell Foundation, where they set up 529s for the students. And that just seems amazing, where they set up a 529, the students can get that money that way. I don't work for them, so I can only say what I know kind of secondhand of it, but I believe they experience less displacement when it's set up through a 529, but there is the capacity of an organization being able to set one of those up for each student.
Great. Thank you so much for that, Nadja. I do have another question, and folks, we do have a little bit more time. So if you have any more questions, let us know. This last one that I see is the taxable scholarship reported on the student's taxes or the parents.
Oh, I would say you would probably want to talk to a scholarship tax expert. The National Scholarship Providers Association does have some tax professionals that work for them that can answer those type of questions, but I definitely wouldn't want to answer that incorrectly for someone.
This is Lisa. My husband's a CFP and he's in the other room. And he said it goes on our taxes. We're now second child graduating in May. And he said that the delta between tuition and what was covered with a grant goes on the parents' taxes.
Thank you for sharing that information, Lisa, and thanks, Nadja. All right, folks, we don't have any more questions. So while we give it another minute, is there anything else that those kind of questions lifted up for you, Nadja, you would like to focus on or share before we close out today?
I think probably just the main thing is trying to have conversations earlier on with students. This can be pretty shocking to people that it happens so commonly. And I really hope there is also a national bill that maybe Michelle can talk about a little bit, where there's efforts to have all colleges publish their outside scholarship information, which I think would be really, really helpful. Michelle, if you wanted to add anything about that.
Sure. Thanks, Nadja. Hi, everybody. There is a national bill. It's called the Helping Students Plan for College Act. And unlike the 6 state bills, this national bill is about transparency and data. And it would require colleges to inform students, and exactly how that will be done is not yet determined, but to inform students and applicants of their outside scholarship policy. So anyway, the devil's in the details, and we'll see what happens with that. And then as far as data, a big hole in our argument all along has been lack of data. And so this federal bill actually calls for data collection. So it's very, very exciting, and the bill is active through December of this year.
Thank you so much for joining us today, Michelle, and providing that additional expertise on the issues. Okay, Nadja, anything else? There's no last questions. And why don't you tell us a little bit more about your organization before I remind folks to complete the exit ticket?
Absolutely. So College Track, I've worked there for almost 7 years, and I have been in the scholarship department the whole time. We are a college access and persistence organization. We operate out of California, Colorado, Louisiana, Maryland, and Washington, D.C. So we're coast to coast, and we support first generation and low income students. And even though my work is really specifically in scholarships and college affordability, we have really wraparound services to support students all throughout high school and through college. All of our students get an advisor that works one-on-one with them. And then, of course, we have the financial support that they can receive when they're in college. We also have in-depth conversations with students about when they're selecting a college, how important financial fit is, which I'm sure a lot of people can see the importance of being on this call today. But yeah, I love talking about scholarships. I love talking about scholarship displacement. If anyone ever has a question that they'd like to follow up with me about, please feel free to reach out. And yes, please do the exit ticket, because I'd like to know if this information was helpful and if this is something that we should do again.
Yes, thank you for that exit ticket shout out and reminder, Nadja. All, if you could use your Zoom reactions just one last time to show Nadja your appreciation for all of this great information, useful tips, actionable insights. We've got email templates. And can you confirm, Nadja, we will get a copy of this deck to share as a PDF, is that right?
Yes.
Awesome. Well, thank you so much, everybody, for joining us today. Complete that exit ticket. We do have a raffle, and we do ask you complete the exit ticket after each session that you join. I just want to say thank you to all of our members, advocate members like Nadja, steering committee members like Oakland Promise, Richmond Promise, Beyond 12, and others who are on this call, champion members who make the coalition possible and who brought this financial aid series to the community. One last reminder, besides the exit ticket, do check out the other sessions we have after today. There's 3 next week. One is actually for students and families to share with you a tool you can use to track your financial aid packages, and that has insights around issues like scholarship displacement. So thank you again to our partners, the University of California, the Cal State, community colleges, Immigrants Rising, Money Think, Nadja, and everybody who's on the call today. We're so appreciative of you joining us. Have a great rest of your week. See you at the next webinar. And this was recorded. The recording will be on our YouTube channel and shared in about a week. Thanks all.